Dividend ETFs can be a great addition to any portfolio. They can provide passive income, share price appreciation, reduced risk, and if you invest into dividend growth ETFs, those dividend payments will continue to increase over time. The Dividend ETF SCHD is actually one of the largest positions in my personal portfolio, and I plan on adding more shares to it over time. And while SCHD is my dividend ETF of choice, there are many others that I believe could perform just as well or even better than SCHD long term. So in this video, I'm going to be revealing the top 3 dividend growth ETFs that aren't named SCHD. And first up on our list, we have the iShares Core Dividend Growth ETF, stock ticker DGRO. If we jump over to iShares.com, we can see the investment objective for this fund seeks to track the investment results of an index composed of US equities with a history of consistently growing their dividend. And then they explain why you should invest in DGRO. It offers low-cost exposure to US stocks, focused on dividend growth. It has access to companies that have a history of sustained dividend growth and that are broadly diversified across industries, and it's going to provide income as well. So let's go ahead and jump back over to Seeking Alpha. We can see over the past 5 years, it's performed pretty well. It's up around 47.59%, and over the past year, it's down about 3.06%. So it's down a little bit over the past year, but when you compare it to the S&P 500 over the past year, you can see it actually has outperformed the S&P 500 during the bear market. So that is a good sign. It means it's going to be a little less volatile during bear markets. Now, if we come down here, we can see the fund currently has a starting dividend yield of 2.36%. We're going to jump into the dividend stats more here in just a moment, but I also want to point out the expense ratio is currently sitting at 0.08%. That is a very low expense ratio. That is definitely something you want to look for any ETF that you even consider. Let's go ahead and jump more into the dividend stats like I just mentioned. If we come down here, we can see the dividend scorecard from Seeking Alpha. Again, starting dividend yield of 2.36%. Annual payout for the trailing 12 months is $1.20 per share. Now, the 5-year dividend growth rate is very good, which is obviously something you want to see when you're looking for dividend growth ETFs. It's sitting at 10.32%, so a very healthy dividend growth rate. And then it has a history of 8 years of dividend growth, and that's actually the entire lifespan for this fund, so it's increased dividends every single year. If we scroll up here, we can see the 3-year compounded dividend growth rate is sitting at 7.86%. Now let's go ahead and look at some of the dividend history for this fund. So like I said, 8 years of dividend growth. We'll go ahead and zoom out and look at the lifespan. So one thing we will point out is that the dividend payments for this fund fluctuate, which is pretty normal for dividend ETFs. But overall, on a year-to-year basis, you can see these dividend payouts have been increasing. You can see that annualized right here. So on a year-to-year basis, the dividend payouts have definitely been increasing at a pretty healthy rate, like we already saw, a little over 10% for the past 5 years. Now, the last thing we do want to point out is the holdings for this fund. An ETF is only as good at its holdings, so we want to look at the breakdown by industry and we want to look at its top holdings. But the first thing we will point out is the number of holdings for DGRO is currently sitting at 449. So there are a lot of total holdings for this fund. And if we scroll up, something you'll notice about most dividend growth ETFs is the top sectors are typically going to be healthcare, financials, and technology. Technology is a pretty common one because these dividend stocks tend to have really high dividend growth rates. They typically don't have as high of a starting dividend yield, but again, think of Microsoft, low starting dividend yield, but very high dividend growth. And then we have financials, which makes up 18% of the holdings in DGRO. These are funds typically like JP Morgan or Bank of America that have starting dividend yields of close to 3 to 4%. And the largest sector for DGRO is healthcare at almost 20%. Now let's go ahead and scroll down and look at the top 10 holdings for DGRO. You can see, like I already mentioned, we have technology right here. Microsoft makes up 3.3%, Apple 3.07%, Johnson & Johnson and ExxonMobil both a little above 3%, and then everything below that is going to be around 1.8% to 2.8%. You can see we have JP Morgan, Chevron, AbbVie, Procter & Gamble, Pfizer, and Merck & Co. Incorporated. So a lot of these companies are pretty common dividend growth companies. I own many of these in my personal dividend portfolio as well. So if you are a dividend growth investor looking to grow your income over time, DGRO is definitely a fund you should consider. The second fund that we are going to be looking at is actually a Vanguard fund, and it's the Vanguard Dividend Appreciation Index Fund ETF shares. I know that is a mouthful, but you can just go by stock ticker VIG. And if we jump over to Vanguard's website and scroll down, we can see the product summary, which essentially is the goal for the ETF. You can see it seeks to track the performance of the S&P US Dividend Growers Index. It's passively managed and has a full replication approach. The funds remain fully invested, and right here is the part that I love about this fund. It focuses on large cap equity, emphasizing stocks with a record of growing their dividends year over year, and it has very low expenses. I'll go ahead and point that out. Jump back over to Seeking Alpha. We can see the expense ratio for this fund even lower than the fund we just looked at, sitting at 0.06%. And that's one of the trademarks for most Vanguard funds. You're going to see very low expense ratios, and most of them are passively managed, which really is a plus in my eyes. Now we can see the starting dividend yield for this fund a little bit below 2%. So yes, it is a little bit lower, but a really good history of dividend growth. And something that's really impressive about this fund is just how large it is. It has over 66 billion in assets under management. Now let's go ahead and jump back over into the dividend stats. We can see a 3-year compounded annual dividend growth rate of 13%. So really a lot of dividend growth within just the last 3 years. 5-year dividend growth rate of 9.87 and a 10-year dividend growth rate of 7.82. And we can see, like all of these funds that we're looking at today, they have been increasing their dividends for quite some time. If you look at the 10-year dividend history, again, the dividend payouts do fluctuate a little bit, which is typical, but on an annualized basis, if we jump over to dividend growth, we can see a really strong track record of continuing to increase their dividends over time. Now let's go ahead and jump into the holdings just like we did for DGRO. And like I mentioned, technology, financials, and healthcare, again, the top 3 holdings for this fund, with technology actually being number 1 in this scenario, with over 21.3% of the holdings being technology, financials coming in at number 2 at 17.72%, and healthcare at around 15.85%. If we scroll down, we can see number of total holdings a little bit less than DGRO, 318 total holdings, but the top 10 holdings make up 30% of this fund. We can see again, Microsoft near the top makes up 4.47% of this fund, so that's a pretty large chunk. Apple at 4.24%, ExxonMobil 3.27%, United Health Group 3.2%, Johnson & Johnson's pretty close to 3%. Then we have some of these other pretty common dividend growth stocks such as JP Morgan, Procter & Gamble, Visa, MasterCard, and the Home Depot. So again, you can see a lot of these technology, financials, and healthcare companies within these top 10 holdings as you see right here. So again, VIG is a very popular dividend growth fund. Again, lower starting dividend yield than some of these other funds that we're looking at today, but it does have the most track record of increasing its dividends over time. We can see it was created in 2006, but it has been increasing dividends ever since. And the last fund that we're going to be looking at is the Vanguard High Dividend Yield Index Fund ETF shares, and that is stock ticker VYM. And before I dig into this one, I do want to quickly mention Seeking Alpha is still running its 58% off sale at my link in the description. So if you're interested in using this platform that I personally use all the time in my videos, be sure to go ahead and check that out. Let's go ahead and start digging into this fund. Again, you can see this is the Vanguard High Dividend Yield ETF. If we scroll down here, we can see the product summary. It seeks to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. It provides a convenient way to track the performance of stocks that are forecasted to have above average dividend yields, and it follows a passively managed full replication approach. Let's go ahead and jump back over to Seeking Alpha. And like you can see with the fund's name, it does have a higher starting dividend yield than most of these Vanguard funds. It has a starting dividend yield of 3.07%. So it's still not massive, but that is a much higher starting dividend yield than some of these other ETFs that we've looked at today. We can see over the past year, it's down about 4.28%. But again, if we jump over to our charting, we can see it has outperformed the broader market during the bear market. And we'll come back and look at this in just a minute. But I do want to point out a couple more things. Again, very low expense ratio, just 0.06%. That's a lot lower than a lot of its peers. And assets under management are almost over 50 billion. So again, a very large fund. Let's go ahead and look at our dividends. And one thing you will notice is actually the 3-year compounded annual dividend growth rate is not correct right here, but the 5-year is correct. It's sitting at 6.61%, and the 10-year is sitting at 7.58%. So the dividend growth compared to the 2 other funds that we've looked at today is a little bit lower, but you do have to keep in mind it does have a higher starting dividend yield. And if we jump over and look at our dividend history and look at the 10-year chart, you can still see it's very clear that they have slow and steady growing dividends, which is exactly what you want to see from any dividend growth fund. Now, if we jump over to our charting, one of the things you will notice about this fund is over a 3-year time period, it's still pretty close to the S&P 500, but over the 5-year period, it does lag behind a little bit, and over the 10-year period, it lags behind quite a bit. So ideally, I think this fund is going to be best for people who are closer to retirement, so they want a higher starting dividend yield, but they still want to see some dividend growth out of their investments. I think this is exactly what this fund is for. If we jump over to look at the holdings again, you can see it's actually going to be a little bit different. We still have financials near the top at 19%, because a lot of those stocks are going to provide higher dividend yields, but then we also have consumer defensive, the second highest at almost 15%. And one thing I will point out as well is technology is all the way down at 9%. And again, the reason behind this is something I mentioned earlier. These companies typically have lower starting dividend yields, but higher dividend growth rates. And they're typically looking for more companies with higher starting dividend yields with this fund. So that's why technology is only around 9%. And again, we can back this up by looking at the top 10 holdings. We have ExxonMobil, their starting dividend yields around 3%. Same for Johnson & Johnson and JP Morgan. We also have Procter & Gamble, Chevron, Home Depot, AbbVie, Merck & Co., Broadcom, and PepsiCo. The top 10 holdings actually only make up around 24.25% of all of this fund. A lot of the times it's a lot higher than that, but in this scenario, you can see the number of total holdings for VYM is sitting at 469. So there are a lot of total holdings with this fund. So again, this is a great option for people who are looking for a higher starting dividend yield, but also want to continue to invest in funds that continue to increase their dividend payouts over time. So there we go. Those are 3 solid options for dividend growth investors, because these funds will provide solid share price appreciation, really good dividend growth, a decent starting dividend yield, and are very low risk. Again, if you'd like to be able to use Seeking Alpha, you can check out their link at my description and get 58% off. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.